Hi, on my videos I like to show you how to save money and how to save time and how to get out of debt. Also how to use credit cards to maximize your money back, cash back or miles, whatever it may be. How to invest in various things with the money once you've done that. I want to show you something or tell you something that I think a lot of people may not realize. Now, in order to save time, in order to save money on some of these high interest things, like a 30% credit card, you want to get it off of that and onto something else like a 0% credit card through a balance transfer or another method. I've got videos showing how to do it without balance transfer fees, and I've got cards that you can get. That's not always available to everyone because it can deal with credit scores, it can deal with the economy and whether banks are lending or not lending, and sometimes you may not be able to get that card with that 0% rate. Here's something a lot of people may not realize. And this is something I actually did years ago, and I didn't realize it until I did it. It wasn't on purpose. Let's say, for sake of argument, or I should always say sake of illustration, you've got a credit card, and it could be anywhere from 20% to 30%. And if you ever use one of these online calculators, you realize that's just a death spiral. It takes forever to get out. If you make the minimum payments, you may not ever get out, or sometimes you'll end up paying twice as much. You owe $10,000. You pay a $200 minimum payment at 25%, you're going to end up paying $20,000 back. That's ridiculous. That means if you charge $200 pair of shoes, they actually cost you $400. That stinks. So what do you want to do if you've got, let's say you just have $3,000 and you're paying this enormous rate. Let's also say that you own your car, or you have a car and you have a car loan, used car loan. Maybe it's a 60-month loan, all right? And you may have paid it for 3 years and you've got 24 months left. So this car loan, I don't know what your interest rate is, but let's just say for sake of argument, it's 8%. All right, so this is at 8% and this is 20 to 30%. So what do we want to do? We want this to go to 0, obviously, and to do that quickly, we would like to get the $3,000 off of there. So let's move it onto something like 8%. It would be better to pay 8 than it would to pay 30. So how do we get this $3,000 down here? You can do it with a refinance. You can call up whoever your lender is. I did this with a car. And you can say, this was a particular time when I was trying to reduce my monthly outflow so that I could make larger payments on things like credit cards. So I was trying to keep some of my payments down, and I realized I think my car payment at the time might have been $500 or $600. And I called up and I said, hey, can I refinance this? And they said, yeah. Now, it doesn't always work. It depends on the car. So let's say that the car I bought was $30,000 and over time it depreciated and it's now worth, I don't know, $20,000. It's 3 years later. Okay. And I owe, let's say, $12,000. And my payment is like I said, it's like $500 a month. And I call up and I got 2 years to make this, right? 2 years left on my loan. And I say, hey, I want to refinance. What they do is they go, okay, you owe $12,000. Let's go ahead and do that for five more years. Now, it's not ideal. It's not the perfect thing to do, but you can do it. And maybe my $500 payment, which was originally on $30,000 or whatever it was, $25,000. Now my payment might be, let's just say, I don't know what it is. Let's just say it's $250, whatever the interest rate is. So I'm happy because my payment went down. Of course, I got to pay it longer. So hopefully this is a reliable car, or it's just going to die and I'm going to keep owing money. So what did that do? Well, that decreased it. But what do we really want to do? Well, what you can do, if the car is actually worth, and they will use something like Kelley Blue Book or another method of determining the value of your car. So how old is your car? How many miles do you have on it? They look it up and they say, okay, we think your car is worth $20,000. Do you want a loan to pay off the 12, or would you like more money? This is what they literally said to me on the phone. And at the time, I was like, would I like more money? What are you talking about? I just want $12,000. They said, well, you can refinance for more because your car is worth $20,000. Now, they wouldn't give me $20,000. I don't remember exactly what they said, but I think it was 80% of the value they were willing to loan me at the time. So let's just say that 80% of that would be $16,000. Okay, so they said, we'll give you a loan for $16,000. And I wasn't really paying attention. I thought, well, that doesn't make any sense. I only need 12. What are we going to do with the other 4? Because I wasn't that bright. And they said, we're just going to put that in your bank account. And I thought, oh, my goodness. I looked at my credit cards and I said, you know what? Can we do 15? She said, sure. 15 is less than 16. We'll do it for 15. I said, great. I got 15 at whatever this rate was. Let's just say at the time it was 7%. Okay, I paid off that 12. So I no longer have this $500 a month. So I lowered it to $250 a month. Or actually, let's say it goes back up to $300 because it's on 15 now. I paid that off. That's 12. Boy, this is terrible. Look at all the stuff I got. Let's get rid of all this. I owed 12. They gave me a loan for 15. Okay, took the 12 minus 12, paid off the car. And now I have a $15,000 loan. And then I had $3,000 left. And I took that and whoosh, I paid off the credit card. Now my credit card went to $0. I put 0% there. I meant to say $0. My credit card is now 0. Now I still owe that $3,000. It's just down here in this loan because now I've got a loan, but it's at 8%. So, obviously, if you watch my other videos or just videos from other people, you know that the number one rule is just go after the highest rate interest you've got. If it's credit cards, personal loans, whatever the highest rate is that you have, pay those off first. Or ideally, get them off of that high rate onto a lower rate. Sometimes you can refinance, sometimes you can consolidate. There's all kinds of different ways. But in this case, what you can do for something like a vehicle, and if you have 2 vehicles, and you can get a low rate, a rate significantly lower than this rate, then just refinance, take out a little extra money, pay it over here. Why are they willing to give you additional money? For example, you might say, well, what if a what if a personal loan was the same interest rate as a car loan? Why don't I just get a personal loan? Well, personal loans are more difficult to get because there's no collateral. Meaning, if you don't pay, they can't take something from you to pay it. So they say, well, they got to look at your credit, they got to look at your history. It's much more difficult. But a car loan, for example, what the collateral is the car. You don't make the payments, they come with the tow truck and they take the car. So it's easier to refinance a car if you find yourself with a low credit score or bad payments or whatever it is. You're more likely to be able to refinance your car if there's some value there, meaning it's worth more than you owe, than you are to get, say, a personal loan. So this is just another method of moving things off a high interest rate to a lower interest rate. I hope that helps. Thanks for watching. Always likes. Please like the video. That way it's pushed out to more people. And if you have comments, I always appreciate them. Thanks for watching, and I hope this helps in your journey to get debt-free as fast as possible.